Let us quickly revise the financial institution part, that is development financial institution in India. So development finance institution in India is defined as an institution endorsed or supported by the government of India primarily to provide development or project finance to one or more sectors or subsectors of the economy. So it is basically an institution which is endorsed or supported by Government of India. Government of India aids that particular institution to help or to provide development project or finance to the subsectors of our economy or to the remote areas or to the least developed section of a society. It emphasizes the long-term financing of a project rather than collateral, that is security-based financing. Apart from the provision of long-term loans, equity, capital guarantees and underwriting functions, it is expected to upgrade managerial and other operational requirements of the assisted projects as well. Its association with its clients is of an ongoing nature and of being a companion in the project than that of a plain lender like banks. So development financial institutions are not working like banks that they have lent and their duty is over. Either they work as a companion who guides you at each and every step of your journey. So it is also termed as an ongoing nature of association. The basic stress is on long term finance and support for activities for the sectors of the economy where the risk may be higher or that may not be feasible for commercial banks to finance them. Maybe the inability of the commercial bank to finance them, so the development finance institution aids here to finance you for the long term duration. Role is not just for long term financing but more of development of significant sectors, so they are also termed as development banks. After independence, the role was limited. The role of commercial banking was limited to working capital financing on short term basis. So DFIs was basically based for industry and infrastructure sector in India, but now it aids in all over development and long term financing. India's first DFI was operationalized in 1948 and it set up state financial corporations at the state level in 1951. So the first DFI established was Industrial Finance Corporation of India, that is IFCI, on 1st July 1948, and then SFCs in 1951. Let us know more about the role of DFIs in Indian economy. What have they done and what are they doing? These are the specialized developmental financial institutions such as IFCI, IDB, Industrial Development Bank of India, NABARD, National Bank for Agriculture and Rural Development, National Housing Board, Small Industry Development Bank of India. With majority ownership of the RBI, these were launched to meet the long-term financing needs of industry and agriculture in India for driving growth in our economy after independence. There have been three phases of the evolution of DFIs in India. Let us see one by one. So the first phase was the setup of development finance institutions in 1964, and the second phase, which was between 1964 to the middle of 1990s. So here the importance of DFIs grew a lot, and it resulted in the disbursement of funds amounting to 10.3% of gross capital formation in 1990 to 91 and 15.2% in 93 to 94. In the third phase of 1993 to 94, the importance of development banking declined. That is, in the first phase they was set up, in the second phase the importance grew, and in the third phase it was a decline phase. Year after 2000 to 2001, the liberalization resulted in the exit of some of the firms from development banking and in a warning in the resources mobilized by other firms. So the importance of DFIs declined. But now again they have stabilized well and they are working well in their specialized sectors. So we'll know more about the features of development banks, what is the importance and what are the important characteristics of DFIs. So DFIs are a financial institution which are specialized to provide medium and long-term finance to business units. Unlike commercial banks, they do not deal in the business of accepting deposits from the public or lending loan to them, but it is a multi-purpose financial institution, essentially a development-oriented bank. It main focus is on development, unlike the basic aid of financial services provided by merchant banks. So the primary objective is to promote economic development by promoting investment and entrepreneurial activity in a developing nation. It encourages new and small entrepreneurs and seeks balanced regional growth as well. By providing financial assistance not only to private sector but also to the public sector undertakings as well, it aims at monitoring the saving and investment habit in the community. It does not compete with the normal channels of finance. There is no competition for DFIs because finance is already made available by the banks and other conventional financial institutions, because other banks also aid DFIs, because ultimate goal is the development of our economy. So there is no need of any sort of competition here. The major role of DFI is of a gap filler to fill up the deficiencies of the existing financial facilities. So the word competition doesn't exist here because it is a gap filler. Its motive is to serve the public interest rather than to make profits like merchant banks or commercial banks. It works in the general interest of the nation. Now we have the classification of DFIs into four categories. First is National Development Banks. We all know it be SIDBI, ICICI, IFCI, IRBI, and IDFC. Next we have sector specific financial institutions, that is TFCI, Exim Bank. Exim works for the foreign exchange. NABARD is specialized for agriculture. HDFC, NHB for housing. Next, we have investment institutions like LIC, GIC, and UTI, which deals in insurance policies and based on investments. Next is state level institutions, that is SFCs and SIDCs, which works at state level. So here is a chart of financial institution classified as per the specialized niche areas. Let us know in detail about the functions of development banks. So the important function is refinance facility. The institutions which funds to units are refinanced by development banks. So if a bank has financed a particular company, then that particular company is refinanced by the development banks as well. In India, the EDB provides reliance against term loans granted to industrial concerns by state FCs. So in case a state financial corporation has granted a loan to an industry, so as a guarantor, development banks act that in case if that particular industry fails, I am there to return your money back. So it acts as a refinance facilitator as well. Next is they undertake the entrepreneurial role because they accompany you in the journey till end. So undertake the task of discovering investment projects, promotion of industrial enterprises, provide technical and managerial assistance as well, undertake economic and technical research, conducting service feasibility studies, etc. Next is financial gap fillers, as we have studied earlier. Development banks provide medium term and long term loans and also help in undertakings to acquire machinery from within and outside the country, and they try to fill the gap of the financial services existing in the financial market, so they don't compete with other financial institutions. Next is joint finance. The requirements of a foreign loan in a particular currency met by one institution and under the writing of securities is met by another. So it helps you to meet the financial shortage suffered by an industry in case of a particular currency as well. If you need loan from foreign countries, it will also help you, and if you need loan from your own particular nation, it will also guide you. So in both the cases, it acts as a joint financer. Next is commercial banking business. Obviously, it deals in the commercial banking business as well. Development banks extend financial assistance for meeting working capital needs to their loans if they fail to arrange such funds from other sources. If a company is not able to arrange any type of loan or financial assistance required by it from the other financial institutions, then the last option we have is our development banks. So far as taking up other functions of banking such as accepting deposits, opening letters of credit, discounting of bills, there is no uniform practice in development banks. So this is not a uniform practice of working its commercial banking business, but it extends this particular financial assistance as well. Next is underwriting of securities. Here the banks try to disinvest in these securities in a systematic way which should not influence the market prices of these securities and also should not lose managerial control of the units. Credit guarantee, issuing letter of credit, as we have seen in the earlier slide. A credit guarantee scheme which was introduced in the 1960s with the object of enlarging the supply of institutional credit to small industrial units by granting a degree of protection to lending institutions against possible losses in respective of such advances. As I've explained in the last slide, they act as the guarantor. Evolution of DFIs in India. So the first development finance institution was set up in 1948, that is Industrial Finance Corporation, and second State Financial Corporation in 1952, which came effect from 1952. It was established in 1951. Then in Jan 1955 we had the Industrial Credit and Investment Corporation of India, that is ICICI. In 1958, Refinance Corporation for Industry was established and which was taken over by IDB later, that is Industrial Development Bank of India. Other DFIs that were launched are Agriculture Refinance Corporation in 1963, Rural Electrification Corporation Limited and HUDCO. Two major steps in the institution building were the setting up of IDB as an apex long-term lending institution and UTI as an investment institution, both starting operations in July 1964 as subsidiaries of RBI. There were new initiatives at the level of states as well in the 1960s. So the SIDCs, that the State Industrial Development Corporations, were set up and the territories as specialized financial institutions set up after 1974 included NABARD, 1981 EXIM, 1982. Shipping and Credit and Investment Company of India, 1986, Power Finance Corporation, Indian Railway Finance Corporation, Indian Renewable Energy Development Agency, and Technology Development and Information Company of India as a venture fund later known as IFCI Venture Capital Funds Limited and ICICI Venture Finance Management Limited in 1988. Then we had National Housing Bank in 1988, the Tourism Finance Corporation of India set up by IFCI, that is TFCI, Small Industrial Development Bank of India SIDBI with functions relating to MSMEs, which was taken out by IDB. So here's the quick summary of what we have studied so far. So private financial institutions and banks focused on profit, but DFIs focused on developing our nation. They work more on non-profit nature basis to achieve the societal goal as well. And the major concern is holistic and equitable regional development. India's experience with development banking suggests that it would be inclined to promoting greater private participation in financing the bank's activities and favor lending to projects that directly or indirectly ensure private profit rather than social benefit. This is also a point to consider that development financial institutions directly or indirectly ensure private profit also, because if you have profit, then only you can aid to the societal benefits. Moreover, it is unlikely to emphasize environmental and social concerns when lending and investment decisions are made. So it doesn't consider environmental and social concerns to that level. Hence, our government need to revive DFI's concept as well, again, so that societal, cultural, regional, rural and environmental concerns also remain intact while sanctioning credit to long-term finance projects. So here are the questions for you. Do answer them in the comment section. So first is DFIs are also known as dash, and next is name a few examples of national development banks. Both are quite easy questions for you all. If you enjoyed the video, do like, subscribe to the channel and stay tuned for more such videos.